Hello everyone. Canadians who wants to invest in big popular US names, US equity, healthcare, banks, finance providers. There's a way to invest in these stocks without having to convert your Canadian into USD. I will talk about this product called Canadian Depository Receipts. It's leased by CIBC, and you don't have to convert to US dollars and pay this exchange fee. As of today, February 11, 2023, exchange fees is 1.34, plus you have to pay brokerage fee, so you can easily pay more than 1.45 Canadian dollars for $1. So I will discuss this alternative method. And also, if you like my content, please like my video, subscribe, and share it with your friends and family, so a lot of people can get educated. It's all free, so it's for your benefit. Okay, guys. All right, so the CIBC CDRs, not a lot of people know about this. If you want to go through this, go to Google and search for CIBC CDR, okay? And when you click on it, you will have this first option. You click on it. This is mainly for Canadian residents who wants to invest in US stocks, because Canadian stocks, we don't have a lot of big returns in some of the stocks, and US equity sector is very popular, and it's in media all the time, so people like to do that. People like to invest in those. So this is the website, okay? And then you go to CDR directory. So you can see there's a list of all the CDRs they have invested. CDR is like ETF. So without going to more details, you can go with same logic. So basically what they do, one thing to note is this is Canadian hedge, okay? So if you go to their homepage, you can watch their video. What this is about, you will get a good idea. But in brief, what they usually do is it will perform similar way to the underlying security, and it's Canadian hedge. So basically that means the currency fluctuations, because currency changes every day, this will not have that factor of currency fluctuation. So if Amazon goes up 1%, this should go up 1%. If it goes down 1%, it should go down 1%. There's a caveat. There are some benefits and negatives of this product, but which I will discuss at the end. But this is what their tickers are. These are on New Exchange, which is Canadian exchange. So you can buy these on any brokerage, on Canadian brokerage. You don't have to pay fees. Okay. Now the product cost. Let's say if Google is $100, this might be like $20. So it's with a ratio. Okay. So you can see ratios mentioned here. So if it is $100, it's multiplied by 1276 as an example, and whatever the yield is, whatever the number is, that's how the shares are mentioned there. So don't expect these to be the same as US dollar. So it's transferable, same ratio. It's all mentioned here. That's how it's been done. Okay. But I'm myself using this product, so I see some good benefits of this. Okay, so these are the list. You can see they have big healthcare providers, ABV, blue chip stocks, AMD. They also have Nvidia. They have all FANG stocks. They have Bank of America, Coca-Cola, healthcare, Home Depot, Microsoft. There's another page here. Disney, Nike, Netflix, Pfizer, Salesforce. So all popular stocks are here. So all these stocks in this list, which is 35 stocks, you can buy in Canadian dollars. You can go to your brokerage and you can search this symbol here, and it should bring the underlying product, and you can buy on your exchange. So today we will look at the return on these and see what are the goods and bads of this. So if I go into their documents, okay, you go to you can go to resources, and you can open their browser, and then I want to tell you something about their fees. So how do they make money? Okay, this is how they make money. So basically what they're saying is they don't have any management fees like ETFs have management fees, but they make their money because they have a spread of less than 0.5% per year on each CDR. So what that means is their fees will be 0.5% of on the entire year. Let's say if you hold one of these CDR for a year, just in a nutshell, if I hold $1,000, okay, if I buy, let's say, Netflix for $1,000, the fees will be 0.5%. Okay, so like $5 the fee will be on each underlying security, which is not bad. Okay, if you convert from Canadian to USD, it's going to be way more than that. Now, one thing to note, which if you want to hold for long term, okay. So let's say if you want to hold for 10 years, 5 years, I don't recommend this, because let's say if you hold for 3 years, your fees will be same as, or fees will be more than US to Canadian dollar. So you're better off converting US to US dollar, pay exchange fees, and then buy in US stocks. Okay. But if you want to hold it for less than $2, or like a swing trade you want to do for like a couple of months, or like a week, you can always use this. You don't have to convert it. Okay. So that's one of the bad things or good things you can say depending on your time horizon. So long term, more than 3 years, buy US stocks, convert to exchange, and short term, always go with this. The other thing is some of these don't have high volume, so it's not really recommended for day trading. So I think it's good for swing trading, five days to maybe let's say a couple of months to a year. So that's what this product is good about. Okay. All right, so today we will review the benefits, or what I'm going to do is I'll compare. Okay, let's compare Tesla, because let's see what they're saying is true or not. So it's going to be an unbiased opinion. So what I will do is I'll go to this Tesla on TradingView. This is US Tesla stock. Okay, I'll change this to line. Okay, and let's change to Neo. So if you go to Tesla, you have to find Neo exchange here. Okay, so you can compare here. Let's do comparison. So Tesla Neo is in yellow. Okay, and then regular Tesla is in blue. Okay, and if I hide regular Tesla, you can see these are new. These CDRs came last August. Okay, 2021. Sorry, not last August, 2021 August, and it's behaving pretty similar to Tesla. So if I now bring back original Tesla, I don't want to go before the release, so that's not going to be a fair a fair type of negotiations or review. So what I will do is I will take summary from the time it's released to now. Okay, so if you look at the returns from the time it's released, let's compare it. Okay, from let's say August when it was announced to today. Okay, so you can see yellow is 16 point. Oh wait, this looks don't seem to be right. Something right. Let's go to weekly to maybe get a better idea. Okay, let's do it this way. All right, because the return didn't make sense. Okay, so let's look at here like this. Okay, okay, maybe this is good. Good way to check. All right, let's do it this way. Okay, so you can see on Tesla. So if I look at the returns from let's say it from October, okay, 2021 to now, you can see there's a difference. Okay, so 26.99 minus 24.8, okay, which is 2.19% you're losing on this CDR. So if you invested in October 2022 21 to October 22, and it's not even October in 23 years, so it's almost like 1.5 years, and you're already paying more than exchange fee. So if you wanted to hold for more than 1.5 2 years, then it's better you convert to Tesla Canadian, sorry, US dollar, and then buy US Tesla instead of holding this ETF. Okay, now let's do like a smaller time frame. Let's say within a year, or maybe we can say this year. Let's say, just an example, this is 2023. Okay, so still returns are like let's say 1%. It's almost 81%. This is 82, so 1% basically still within few months. So it's not really that great, I would say, but still an option. You don't have to convert to US dollars for short time. So if you want to take advantage of this bounce in Tesla, which we got, you could have just bought this CDR, and you could have got big returns based on that. So let's see if it lets me. Yeah, here's a percentage. So we had more than almost, at what point we had almost close to 100% return. So you could have just bought this Tesla CDR. It's here, okay, on New Exchange, and it's at $18. compared to Tesla at $196. So you could have just bought this, and you could have taken all the profits instead of converting. So let's review another product, which is Apple, and let's see how it goes to Apple. So if I go to Apple, I compare APL. Let's look at Neo Apple. Okay, same percentage scale, and you can see this one. Let's bring it here. So Canadian Apple on Neo. Uh, yeah, it's kind of odd. Sometimes what happens is towards the end of the day, there's a difference. There's some fluctuations because these stocks are like so low in price. Every cent increase can affect percentage. But what they usually do is next day they recover. Let's say if it is down 0.35 today and Apple is green, next day you can expect the CDR to have 0.35 more than the closing price of Apple. So that's why having a bit of longer time frame is a good analysis. So let's check returns of this since it's released. So Apple was a bit newer. So let's say from here you can see since October or September there's a difference. So let's calculation 1.9 minus 0.74. So this is not that bad, okay? This is only 1.16%. So Apple CDR is good. So you can do that. You can compare each of these CDR. Okay. One thing to note, like I said, volume is not that great on every CDR. Tesla is very good in volume. It was more than 1 million shares traded. So Tesla is very popular stocks. A lot of people are buying it. So people are still getting into knowing this. So I just wanted to share this with you. Yeah, and also these are very cheap in price. Basically, the cost of these, look at this, it's like 22 bucks instead of 151. Tesla is like 18 bucks. And then let's say if any other stock, let's say Nvidia, which is like Nvidia right now is on US dollars is $212. And if I go search Nvidia on Neo Exchange, which this is like 20 bucks, okay, 20.44. So it's good. The value of this is not that high, so you can easily buy this. You can buy like 4 or 5 shares of Nvidia on for 100 bucks instead of if you have to buy US dollars, you have to pay like $300 to convert and then buy one stock of Nvidia. And also you can also build a portfolio if you like all FANG stocks, big FANG stock. You can just buy these CDRs for 100 bucks. You can get each of Netflix. You can get Google. You can get Apple, Tesla. Uh, let's go back here. Yeah, Amazon, like AMD. So you can choose. They're all like near 20 bucks. So you can build your portfolio like that instead of buying an ETF because ETFs are also they also have fees. So it's similar concept. But again, if you want to hold long term, it's better to buy US dollars. Okay, guys, that's it from me. If you like my video, please like. Take care.